Everyone, it's Zach back with a new mortgage video. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. Today, I want to shoot a quick video explaining why your monthly payments may have gone up and explain some of the things that go into that and what you can do to potentially combat that. So first of all, this is designed for people that already have a mortgage and people that have a fixed interest rate. If you are not 100% sure you have a fixed interest rate, reach out to your mortgage professional to make sure that you do have a fixed interest rate, because a variable interest rate is a whole another can of worms from what I'm going to talk about. If you do have a fixed interest rate and your monthly payment went up, it's in part, at least, going to be due to property tax increase. So the other factor, so property taxes are based on the location that you live in. Every county is going to have their own calculation of a percentage of the value. And then each year, the county will check your property and adjust the value that they assess to your property. And based on that, property tax amount will change. Now, you can always protest your assessed value. If you feel there's good evidence to suggest that, hey, you said my property was worth $400,000, I think based on these comps, you're going to have to prove this with evidence. I think it's worth $360,000, I should be assessed less. That is something you, and I would recommend reaching out to your realtor, can put together to try and get your property taxes lowered. This is going to depend on the state, but at least in Texas, for people living in the property, if that is your homestead, there's a limit to how much the property assessed value can increase each year. So that's another thing to take into account, or if you don't live in Texas, something to look into. But the other thing to understand is you may have what's called an escrow shortage on top of your increase in property taxes. Now, an escrow shortage, this is basically if you are taking out a mortgage, unless you're putting a large down payment, most lenders will require that you have an escrow account, which is basically, it makes it a little simpler. You're paying one total monthly payment. If you have an HOA, that's paid separately, but one monthly payment that pays your mortgage, your insurance, your taxes, and possibly mortgage insurance all together. Then the mortgage company will pay your property taxes and your insurance out of that lump sum that you're paying them. Now, what happens sometimes based on the timing of when the mortgage company adjusts your payment and when the county assesses your property tax value is you may be paying this fixed monthly payment, and when the mortgage company has to go and pay your property taxes, the property taxes are now more than what you've been paying. So maybe you've been paying what equates to $4,000 in property taxes for the year, and now all of a sudden your property taxes are worth $7,000. The mortgage company is still going to front that $3,000 difference, but when the time comes to adjust, they're going to say, hey, we paid $3,000 extra. We're going to increase your monthly payment $250 a month, or you can just pay us the $3,000 and we'll call it even, on top of the increase in regular property taxes. So if it's an escrow shortage, that's not really something you can do anything about. It's just something you want to understand. If it is strictly that your property taxes have gone up, again, I would recommend looking into protesting your taxes. And if you're living in the property especially, but also if you're disabled, if you're over 65 years of age, look into other exemptions that may lower your property tax rate as well. So yeah, that's all for this one. But if you have any questions, reach out to me at 617-620-0083, or feel free to comment below. Thanks for tuning in, and see you next time.